Well, let's bring in Parag Thatte, who is an equity strategist at Deutsche Bank. He joins us now. Parag, thank you so much for coming on the program. First of all, just to get your reaction on these allegations that Trump is being accused of insider trading.
Thanks for having me on the show. So the information we have is what is just publicly known. We will follow the investigations as they go along and we'll see what comes out of it. Of course, there's a lot of anecdotal sort of evidence and rumors of unusual trades happening around the time of the post and before the official announcement. Whether that was because of speculative buying, seeing some sort of change of tone from the administration this morning, or it was it's some sort of insider knowledge trading. We would not know, and we just have to wait for the investigations to proceed and see what comes out of it. But given the steep fall in the equity market and the fact that in our reading, a lot of investors were already quite underweight equities at that point, any sort of positive news, positive headlines to the effect that the trade war was being sort of partially reversed would have led to very, very large rallies as we saw.
Well, how would investors react to this if this does turn out to be true, if these allegations turn out to be true? Will this scare off investors?
I mean, quite apart from this, there are many other reasons for investors and companies and consumers to be very, very cautious here, just given the lack of clarity and the sheer amount of uncertainty around some of these policies. So this will add to that, but I think all of the sum of all of the other announcements and the backtracks and the escalations that have already happened, I mean that is enough by itself, I think, to reduce corporate spending on new capital projects or hiring, or for consumers to basically slow down their spending, especially on discretionary big ticket items.
Well, a key sign of what you're saying there is, investors selling off their treasury bonds. We saw that very aggressively happening yesterday. We've also heard that some are looking towards the German government and yields from the German government because they fell yesterday, signaling strong demand. What does this mean for the US economy when you have investors looking elsewhere from those treasury bonds that are usually considered a safe haven asset?
Right. I mean, this is a U.S. specific shock, we would say, a U.S. policy induced shock. The administration is out there saying that the rest of the world is going to pay for all of these tariffs. But some simple calculations would show that a lot of the hit is going to be taken by U.S. companies and U.S. consumers. And so it is not a surprise that there is sort of some skepticism of investing more in the U.S., especially because the rules keep on changing. So if you want to invest, whether that's capital spending on the ground or it's just capital flows in stocks and bonds, there needs to be some confidence in the rules of the game, and that has continually changed. So and that's one of the reasons why we saw equity markets in the U.S. down, but also the U.S. dollar and U.S. bonds basically declining altogether, which is very unusual. Usually, given the size of the moves in U.S. equities to the downside, you would have seen U.S. bonds and the dollar also rallying. So those are worrying signs.
Well, just one final question for you, Parag. We've had so much back and forth between the US and China. We've had that clarification from the White House today that tariffs on China will be 145%, with neither sides of showing any signs of backing down, excuse me. At some point, surely there are going to have to be negotiations. Can this tit for tat continue with no end?
I mean, it cannot. There has to be, like you said, some resolution at some point. And whether the tariffs now are 100%, 125%, 145%, I mean, anything beyond, say, 60, 70, 80%, it's going to basically get trade to come to a near halt because the tariffs would just become prohibitively expensive. And so the fact that they went up from what we thought was 100 to 125 to 145, I mean, at some point it does not have much meaning because the associated trade is already, it is going to zero. To us, the important thing is that as the tariffs are going up, of course, China will suffer in the near term, given the lack of, as exports go down. But remember, U.S. companies and U.S. And U.S. consumers import these products because it makes sense for them financially to do so. So whether that's used as an input towards other manufacturing processes or just used as final consumption, companies are buying these products because they make money selling them eventually. And so if you cannot buy those products, it also means a hit to U.S. earnings. And so at some point there would need to be a resolution. What form that takes is what we need to see. I mean, both sides would need some sort of a face saving mechanism to announce a deal in some way. But yeah, we do expect it at some point, hopefully soon.
Hopefully soon. Parag, thank you so much for joining us on the program. Really good to talk to you and get your analysis.